What's up, everybody? Happy Wednesday. Shad's not going to be joining us today. He had to step out for a family emergency. So it'll be myself for the hour. Scott DeVito, interim CEO of Ayr Wellness, is going to be joining us off the top. And then Jim Cacioppo from Jushi is going to be joining us at around 4:30 to go through earnings. I know Trulieve reported today. Hats off, Kim. Great earnings report. I know that margins were stable, top line was stable. And if you go off Pablo's report from Monday, pricing is somewhere around 25% down year over year in the state of Florida. So kudos to you with the fundamentals and just everything that was intact on the earnings report. It was a great report out of the gate. GTI and Curaleaf here are reporting after hours. And for those that haven't seen it yet, Boris will be joining us tomorrow at 11 a.m. For a special earnings live stream. So we'll be live with Boris to go over earnings tomorrow at 11 a.m. at a special time. And then tomorrow actually is a pretty heavy report as well. You've got the Cannabis, Cresco, Verano, Kronos, Ascend, and TerraScend that all report tomorrow. And then just a reminder, on Monday, Luke Mongo from Canopy Growth, and then Jason Wild and Ziad will both be joining us to go over earnings. So Monday will be busy as well. And then we should have the guys from Verano scheduled in here shortly. So we'll try to get as many of the CEOs as possible around earnings to go over the prints and get you guys as much information as possible. But I mean, yeah, I agree. Kim's print was impressive. She had a lot of very positive commentary on the drinks business, positive commentary on her loyalty program. I think she had somewhere around 770,000 unique consumers for the quarter. It's quite impressive as what she's going on. I mean, I know Shad's reached out to have Kim potentially on to come talk about earnings and have her on at a later date. So we look forward to having her if she's available. Without further ado, I mean, let's get into it with Scott from Ayr and kind of dive into the restructuring process and what's going on. Thanks for joining us, Scott. Great to have you. Great to have you. So, I mean, before we dive in, I mean, everyone's been seeing the headlines and seeing the press releases as per what's going on with Ayr, with the restructuring. With your background, I know that you come from consulting. Is your background in restructuring, and were you brought in to, I guess, manage this process when Cohen was, I guess, resigned as CEO?
Yeah, I'm a career turnaround restructuring professional. I started in life long ago as a corporate bankruptcy lawyer, and then moved to the business side about 25 years ago to work with companies in transition.
Nice. So, I mean, as it relates to Ayr, I mean, a lot of people have. I dug through the filings last week. I've been keeping track of the story as it develops. I guess one major question before I kind of dive into the minutia of what's going on with the assets and how it's going to get broken down. What was the thought process for why now as it relates to the restructuring? Was it the business is just hemorrhaging money and the debt and the seniorage on the top of the cap stack? It was time to restructure and kind of equitize the debt and get the company out from the weight out underneath. From the weight of it, but has there been any insight from, I guess, the management team or in the process as to why now in terms of executing this?
There was no reason to hemorrhage any more cash under the debt burden that the company was under. As is often the case, frankly, they could have done this sooner and to even greater benefit, but very timely to do it now and get the company on a proper capital footing.
Yeah, and then as far as coming out of this transaction or the restructuring, are there any expectations for, let's say, the public vehicle and the public equity? I know that if you go through the filings and you read through the process that's going to happen with the auction, you're looking at the prime assets: Nevada, Pennsylvania, Florida. I think a couple of the New Jersey assets potentially, and then I know there was another list of assets that will go into, let's say, NewCo. Are there plans or are there any expectations, let's say, to the public equity, or is that pretty much zeroed out as a ramification of what's going on with equitizing the debt?
Without getting enmeshed in too much detail on the mechanics of how the whole restructuring will be effectuated and ownership will be conveyed to our current senior note holders, the long story short is the equity will ultimately be extinguished.
Okay. So the Newco is going to take on what, let's say the like I said, the Pennsylvania assets, Florida, equitize those assets, and then run them under Newco
Well,
on a go forward basis.
I'm just going to take a minute to talk about the go forward footprint because there's been a lot of confusion.
Yes.
And I know the restructuring support agreement has not yet been filed. It will be shortly and be public, and folks will be able to see all the details. But just to clarify, so the go forward business that will be owned by the senior note holders and recapitalized, not just with vastly reduced debt, but also the opportunity for fresh capital. Mm-hmm. This will be, and I'll just try and go sort of geographically east to west. It will be New Jersey minus our Lakewood manufacturing facility. It will be Pennsylvania minus the 3 dispensaries in the State College area in central Pennsylvania. It will be all of Florida. It will be all of Ohio. It will be Virginia, which in fact we intend to build out with new capital from our senior note holders, soon to be new shareholders. And it will be Nevada minus our Nevada Kind and NV Green grow and manufacturing facilities.
Okay.
So keeping all the retail in Nevada.
Okay. Are there any expectations, let's say, for timelines? I mean, I'm assuming we could expect Q1, Q2 for this to be fully, not executed, but I mean, have some clarity, or not clarity, but closure around the restructuring?
I'm going to write a check. I'm going to write a check. I hope we can cash. We expect to be finished, subject to regulatory approvals coming along, by the end of the calendar year.
Okay.
We are well into the mechanics that we need to effectuate the asset transfers. We're also well on our way with respect to the wind down of the things that are being left behind that won't be in the go forward business.
Okay.
And so the real long leg in the critical path will be regulatory approvals for the new owners.
Okay. And then as far as I've seen a lot of articles that were circulating on prominent media outlets in the cannabis space that are alleging that these assets are going to get liquidated or these assets are going to get shut down. As far as those rumors go, I'm assuming that is abjectly false. These are not getting liquidated, shut down. These are getting put into Newco, and then they're going to be operated there on a go-forward basis.
100%. I mean, in Virginia, like as I say, we have a license there. We have not yet begun to build. We intend to build out our entire 6-store footprint over the course of the next year or two. We will be meeting with the regulators, we hope, at the end of this month to get approval for our first. And we certainly intend to operate going forward in all the geographies that I mentioned. If it's being conveyed to the senior note holders, our new owners, it's going to be operated as an ongoing business. Okay.
And then has there been any talks of, let's say, like brands and IP that gets transferred over in as well? I mean, I'm assuming that just comes over concurrently with the assets, and then the new owners can choose to run the operations under whatever banner or brand they see fit moving forward.
Correct. All the current brands will essentially convey to the new owners, and they'll sort through over time. I'm sure we'll sort through which brands we want to emphasize.
Okay. And then as far as I guess from a liability standpoint, with any of the outstanding balances or anything like that, that stays in Ayr proper, we'll call it, the Pubco right now.
Yeah, unless expressly assumed by the lenders, and they will be expressly taking on many liabilities, of course, for all of our store leases, the debt associated with all the go forward assets. So there will be a lot of liabilities that they are assuming, but there will also be liabilities left behind. Yes.
Okay. So, I mean, I guess what would be, I guess, just Ayr's statement, or just, I guess, statement to shareholders currently right now, in terms of, let's say, the equity holders that are still related to the Pubco. I mean, I see this as, unfortunately, this is doing business. You make bets, some bets fail, some bets succeed. Restructurings happen. This happens in business all the time. This is just a natural function of business.
This is indeed the story of business. The idea of and the attraction of cannabis is obvious in terms of the demand for the product and the opportunity for very healthy margins in the business. very typically and very predictably attracted a lot of capital and a lot of investors with a lot of optimism. And now we're in the second phase of the birth of an industry, the winnowing out. And so, and as you say, it's the story of business. We take risks, and some work out, and some do not. And indeed, Ayr's current publicly traded equity is not likely to have value in the future.
Have you seen this in your career in restructuring, where new industries, operators, and participants are succumb to hubris, and then they take on these amounts of debt, and ultimately this is what you see on the back end with these transactions and these restructurings just happening industry wide?
It's been my entire career, and long preceding it. I mean, you can go back to the cereal industry at the turn of the 20th century, when there were 60 cereal companies in Battle Creek, Michigan, which ultimately sorted themselves out to 3. You can look at our own at the turn of this century, the tech industry. Who doesn't remember the sock puppet and Webvan? And now indeed you can look at many other industries that people would be less familiar with in between. But now you can look at cannabis, and this is actually just very natural and typical of a birth of an industry and a growth cycle.
Yeah, and I think people should also be reminded that it's not the first one that's happened in the industry. No. We've dealt with several of these. Obviously, Ayr just happened to be one of the prominent players that this has happened to with some brand equity, I guess, in the space. How, I guess, moving forward, do you see this? I guess this might be too of an in-depth question, but I was going to say, do you see this vehicle as being like a platform play with Newco, or that's on the senior note holder side, and they're going to do with those assets as they see fit? And are they going to bring in a new management team, or do you think that the Ayr management team is going to transfer over into Newco?
Well, my title is interim chief executive officer, and I'm here primarily to assist with the turnaround and restructuring of the business. Mm-hmm. But the balance of the management team will indeed be moving over into the go forward business. And in fact, for me, one of the gratifying things about coming into this company was that among the companies I meet, this was one of the most stable and effective management teams I had the opportunity to work with. In regard to the question relating to consolidator or consolidated in the future, obviously to be determined. This industry is very dynamic, very much in flux. There's assets and other companies for sale right now. There's also, of course, the big players who I'm sure will be looking for opportunities, and all to be determined as to whether Ayr Wellness is a consolidator in the future or is consolidated.
Got it. And then I know you had mentioned that the full agreements will become public, I guess, in the coming weeks as filings and more of the process progresses. I guess in closing, as far as next steps go, is there anything that people should be watching out for or looking out for in terms of documentation, I guess, on the process moving forward?
Well, and it'll actually be days. Our restructuring support agreement as a requirement under the securities laws, I believe we have just 5 or 6 more business days to file it. Okay. So many details will be available. People will be able to understand precisely which assets are going to be in the new go forward business, which ones will be left behind. Okay. But I would say the next milestone to look for is the beginning of the process of selling the assets to our note holders, because it has to happen state by state. Okay. So there will be multiple state processes to effectuate that, which will be coming in the next, call it 4 to 8 weeks.
And is that an open public process, or are we going to see that, let's say, on like an asset by asset basis, or the process starts, the process finishes, the assets are amalgamated, and then it's just announced that these were the assets that were put into, let's say, Newco, and the transactions, the restructuring is done?
Because the cannabis business cannot avail itself of U.S. Chapter 11, these will happen in state court processes that will be public. Okay,
awesome. Well, I mean, I appreciate it. Obviously, the disclosure and the candor is greatly appreciated. It's been great having you. Look forward to potentially having you back on if and when everything takes place, and we can really get some direction and talk about the footprint moving forward and the future direction for Ayr.
Well, thank you for having me, and we'd be excited to come and talk about what we'll be doing going forward.
Thank you, Scott. We appreciate it. Look forward to having you back.
Thank you.
Thank you. I hope everybody got value from that. I mean, obviously everything's going through the process. They're going through the motions with Ayr. I mean, the footprint, it's going to be a nice footprint depending on what they take on the back end that goes into Newco. I mean, we'll see what happens when the RSA and the documentation is fully made public and we'll get a better picture. But like we've been saying, I mean, a lot of these companies have taken on a lot of leverage. The writing was on the wall a couple of months back, and when Amendment 3 didn't pass in Florida, there were some signs that this could be the fate of Ayr. I mean, but as Scott had alluded to, I mean, this is his entire career. This is part of the natural business cycle, especially in emerging high growth industries. Hubris takes its own shape and companies get over levered. And unfortunately, this is part of the business process. Obviously, I wasn't personally allocated towards the name. I know that I was bullish on Ayr about a year and a half ago, 2 years ago, right before the HHS announcement came out, and I thought it was a good trade. I mean, I think they have a great Florida footprint. They've got a couple of other good assets in there, but unfortunately, leverage is a bitch. Leverage is hard to service. The cannabis industry has not been kind fundamentally to a lot of these MSOs over the past couple of quarters, and like we've alluded to, I mean, this is just naturally part of the process in a transformational industry. That being said, GTI has actually reported for the quarter revenue of $293 million, an increase of 4.7% over the prior year. So congrats, Ben, on another beat, or not another beat. I know the last quarter was relatively flat. Congrats on the beat. Cash a quarter total ended $177 million. GAAP net loss of $0.65 million, or 1 penny per basic and diluted share, excluding a one-time loss of $11.7 million on sale of assets. Adjusted EBITDA of $82.7 million, or 28.2% of revenue. Cash flow from operations of $56 million. Repurchased approximately 5.6 million of the company's subordinate voting shares for $24 million in proceeds. Good quarter from GTI. Ben's putting his money where his mouth is, so everybody's getting that line on the buyback. 24 million in paper bought for the Q. So I mean, that's a great sign. I think the blackout period ends here within the next week. I'm assuming Ben is probably going to start to put more cash to work in the buyback program, as they have. If you've seen on Twitter, Ben's gotten increasingly more bullish on, not bullish, but just more on par with rescheduling or some sort of reform event happening, which is good to see. Like when somebody that's been skeptical historically has come into the fold and is starting to believe in potentially the government doing the right thing and things getting righted and the wrongs getting righted in the cannabis industry. So that'll be good to see. Obviously, the call is going on right now, so I haven't been able to really get some color. But I mean, GTI put up another strong quarter. From the looks of it, Kim and Trulieve put up a better quarter fundamentally. And I know if Ben were here right now, he would object that he's paying taxes, paying all of his taxes. So, I mean, I need to kind of go through the filings, really kind of look what went where to get a better hold on who won, but just top two companies in the space putting up $300 million quarters. It's great to see. It's good to see that the quarters weren't down. I mean, I think a big trend that we've seen in the cannabis industry has been price compression in terms of prices going down, with the caveat of unit velocity has been going up. So that's what I would assume buoyed Kim's earnings, for instance, in Florida. I know that, like I said off the top, Pablo alluded to a 25% price decrease in Florida across the board, but the unit economics were up in terms of units per consumer and basket size. Also, now we got Curaleaf reporting net revenue of $314.5 million, a year-over-year decrease of 8%. So Curaleaf is down year-over-year on top line compared to Q2 2024. Sequentially, net revenue increased 1.5% compared to Q1 2025. Gross profit of $152 million and gross margin of 49%. So that's a decent gross margin, an increase of 160 bips year over year. Adjusted gross profit of, wait, it's in there twice. Net loss attributable to Curaleaf Holdings Inc. from continuing operations of 50.6 million, or net loss per share of 7 cents per share. Adjusted net loss from continuing operations of 47.8 million, or adjusted net loss per share of 6 cents. Adjusted EBITDA of 65.5 million, and adjusted EBITDA margin of 21%, a 40 bip decrease year over year, and cash at quarter end totaled 102.3 million. It's a decent quarter from Curaleaf. I know some of the metrics are down. There's decent sized losses in here, which it's hard to tell what they're attributed to just off the bat. So I'm sure this is going to be an interesting conversation with Boris tomorrow. We're planning to go deep into Europe, go deep into the hemp business. Obviously, deep into these earnings, there's going to be some questions that need to be answered. And I think one thing stands out here in terms of, let's say, the big three with Curaleaf, GTI, and TrueLeaf after they reported. Kim's got a war chest of cash. Kim's got $404 million in cash on the balance sheet, if I'm not mistaken, give or take $3 or $4 million in either direction. So, I mean, Kim's got the cash to make moves. She's also got cash to start to pay down debt. God forbid the IRS or the tax liability ever comes into play. But Kim's building a battleship. She's got those high margins. She's got the top line stability, and she's got a hell of a lot of cash compared to her peers, which is quite impressive at this point. GTI at 177 million in cash. I guess with that being said, I mean, with the big three coming, does anybody have any questions so far as to what's potentially going on in earnings season right now? We've got Jim joining us here in 7 minutes at 4:30 to Jim Cacioppo, CEO of JUSH, over JUSH's earnings in detail. And there's a lot to dive into in the markets that they're in. They had a big bump in branded product. And Virginia is exciting in terms of their story. Are the cannabis prices in Florida stabilized now? I think it's a great question. I mean, down 25% year over year. I would like to think that they are stabilized. I think the prices will go down as far as the MMTCs or the operators in Florida let them. Companies have product at the end of the quarter that they need to get rid of, that they fire sale. Companies want to start price wars. Not really going to say who, but it's easy to control the pricing in the state of Florida to a certain extent, at least set a floor in terms of what's going on. I would have to assume that we're somewhere at a floor as far as pricing goes, and prices are stable in Florida. I know with the big three reporting, we've got Verano coming out tomorrow, who Verano also has a large footprint. Move is a formidable player in the Florida market, but they don't put out their numbers anymore in terms of retail numbers broken down state by state. So I can't really see if they are up or down, let's say quarter over quarter or year over year in Florida, which would be a good benchmark. But we're going to have Verano, like I said, I think on next week, either Monday or no, it can't be Monday, probably Wednesday, to go over earnings. So if and when we have George, Aaron, or Darren on, I don't know which guest is confirmed yet, but we will be able to kind of dive into those metrics. And I'll go into a Boris tomorrow. I'm going to dive into the Florida market. I know they launched Premium in the state. He turned his Clematis in Palm Beach location into a hemp dispensary. So it's going to be good to get an update there. And there's a lot to dive into with Curaleaf. Do we think Kim will give some of that cash to some politicians in Florida to help pass the new amendment for legalization? I don't know. I would be betting that she's going to allocate some of it to Smart and Safe, some of it to initiatives around the campaign. I'm sure Smart and Safe will get geared up here again. I know she's, I think, 75% of the way to the signatures. And then the amendment should get approved to be put on the ballot, I think as late or early as April, I read in Todd Harrison's call notes with Cannabis Confidential on the Trulieve earnings call. So we will see what happens there, but I would assume so. Yeah. I mean, you're going to have to spread around the wealth and do what you got to do in terms of contributions. But as everybody knows, and everyone that's watching the show, we've still got Ron DeSantis in the state of Florida. We potentially will have someone with the last name DeSantis running for governor. Again, be it Casey, his spouse, in the state of Florida. It's going to be very interesting to see what Ron does on the second time around. I think Kim had also mentioned on the earnings call that the legislation has been written more or altered to be more palatable in terms of the Florida legislature digesting and accepting it. But we'll see. I think it's going to be a battle either way. I do think cannabis, though, is going to come up in the gubernatorial race, and it's going to be an issue that's spoken about within the conversation, as Floridians do want adult use cannabis. 56 point something % voted for it in last year's election in November in favor of it. That's a majority. Anywhere else you see in the United States, obviously, I know we have the 60% hurdle, so we didn't pass with that. But I think adult use cannabis comes around at some point in Florida, and that's a call option on Trulieve. Trulieve, at some point in the future, whether it's next year or whether it's 2 years from now, Kim owns Florida, and Kim is going to have the adult use market in Florida unlocked for her at some point in time. And the business is stable and her margins are steady without adult use. So once you get adult use, and she gets adult use in Pennsylvania, which I think Modern Flower and Roll One are actually the #1 brand in PA, if I read that right in Todd's call notes as well. Trulieve is trending up. Trulieve's trending up. They're showing brand power. They're showing great strategy as it relates to their customer loyalty and their retention method, their retention metrics, and it's obviously working. No worries. I don't think Trump's going to have a lot of influence as it relates to Amendment 3, Emilio, to be completely honest. He fully endorsed it last time, and we are here. So what else? Which MSOs had earnings today, and did they beat? Asking if they beat is ambiguous at best. I mean, there's not a lot of analysts covering the space anymore. So beating in terms of, let's say, the street's expectations is foreign to the cannabis space. But I mean, Curaleaf, GTI, and Trulieve all posted, and Trulieve and GTI both had very good earnings from what I can see. Curaleaf had a sizable loss on there, and a couple other metrics that I need to dive in deeper and listen to the call of Boris. Like I said, we'll have Boris on at 11 a.m. Tomorrow to go over earnings at a special time on stream. And it looks like we got Jim behind the scenes right now. So let's see. He's on his phone. Let's see. He's good to go. Arns, let's bring Jim up. How's it going, Jim?
Good. How you doing, AB?
I'm good. Good to see you. I know we get the check-in once a quarter. It's always a good conversation. Congrats on the queue.
Yeah. Thank you.
How's everything been?
Good. Everything's I like the quarter, and I like stock action of the industry for sure. So that feels a lot better than before. It based on our call, it seemed like people were paying a lot more attention than they were, in the depths of a bear market. Like, nobody cares, right? So it seems like people are paying attention, have been asking questions, and all those type of things.
Yeah, it's amazing what price action to the upside for 2 weeks straight will do to people's psyche and attention. The fact that MSOS has gotten, I think, 50 million or 40 million in inflows over the past month. Stocks have been trending to the upside. Big MAGA influencers and people close to the administration have been talking about rescheduling, which obviously we're not going to dive into as much because I don't want to prognosticate really on reform. But everything's been trending up in terms of sentiment around the space. So I guess diving into the numbers, I know you guys had a nice quarter. Top line was good. Margins came in. I mean, how would you define the quarter numbers wise in terms of the print?
Yeah, no, I was very pleased with the revenue growth. It wasn't unexpected given that we've been investing in Ohio. So I think there's plenty of more of that to come. And we could talk about that. And in terms of the margins, at 44% gross margin, I think we should be able to, I mean, certainly with scale and things going adult use, we would get to much higher margins, but even before then, so I think the work is really more in the margin, and having the revenue grow and the margin grow could be quite powerful. So that's kind of our goal. And we had the first show of that. I think we were 40% gross margin in Q1 of 44 in Q2.
Okay. In terms of the margin, what are you doing internally, let's say, to defend that and get it and get it back to that, let's say 50.4% number that you were at? Is that attributable to the emphasis on branded products moving forward that you're selling through, that you clip a higher margin on at retail?
I think, yeah, I no, but the answer is we've been doing that for a while. So I think that to the extent that we have upgrading our product portfolio, because we began as more of a value player because we were retail first, and then there's a learning curve on growing, and so just in our large market, Pennsylvania, what I'm talking about, and we were definitely more of a value brand. Virginia, we've always been the best brand, so it depends upon the grow, how it's built, and the people and everything else. So Virginia's leading, the leaders of Virginia are now leading the company. So that, just putting that to the side, we could talk about that in terms of operations. But we will see. We've migrated to the high end, but we're in the early stages of that on flower. For example, in Virginia, we have Flower Foundry, where it's third. It's I think it's we said it on the conference call, but it's like third bestseller that we have, which is amazing. We just rolled it out, and we also launched a very high end gummy, rosin with Stacey Rush, who's a star of Housewives of Potomac. So we're getting a lot of PR around that. It's in all our dispensaries, and so that's a great product. We're doing more concentrates and things like that. So we're filling out our SKUs. But I think the more important part of it is the quality of what's going in the bag and the yield. Even the value brand Sachet, it's way up, in terms of potency. So our value brand Sachet in flower, Sachet, is the best it's ever been, and on the market it's very competitive in terms of its quality, in most of our states, and if not all. So and then at the high end we're rolling out sort of hijinks, but and so we're getting more yield and we're getting more units out. We're getting more units out of the factories. So if you look at the cannabis the big three in Virginia, Massachusetts, and Pennsylvania, Pennsylvania and Massachusetts were underperforming in Q3, Q4 last year and Q1 of this year. We made a lot of personnel changes. We made some nice targeted investments, and we've really streamlined and done some great things. And we put that Virginia team in charge of the operations, like I said. So and I jumped in real hard last year, starting about this time in August, to just to right the ship. I didn't like what I saw, but we see the cost per unit coming down. And that's the key. The more units, so think of like Pennsylvania, our biggest factory, right? If you've increased your units by 50%, right? I'm not sure what it was on our low to high, but we're going to new highs, hopefully in July. I haven't seen the final numbers, and in August. But it's virtually all fixed cost. I mean, you don't move labor around that much. It's electricity, it's the lease, it's virtually all fixed cost. The machinery, So you're basically you're improving your margins quite dramatically by increasing the number of units produced, which depends upon getting units out the door and packaging, but of course having the biomass. So that's the big play on the margins. X of things going adult use for us is the grower processors increasing the units production, increasing quality.
And I think you had mentioned that on the earnings call. I think there was some language about incrementally growing the canopy, I think in Virginia, in one or two phases. Is that an expectation of adult use, or is that bringing on more capacity to cater to that premium product in the state?
So both. So we're bringing more canopy on in Virginia and Pennsylvania. And so, but it's both in both states. We have capacity to add for medical, and so in Virginia we've been short product because our business is growing, right?
Okay.
And also, even if there's, I mean, we stay in our HSA, we have very high margins in that state. It would be in the envy of any large MSO, right? Our Virginia business, but we are competitively priced with Maryland, which is an adult use market. So we don't have this price umbrella. I think some people who don't have that on their border, in the state kind of have higher prices. You can look at the menus. We look at the menus, and so they may be stagnating, and our wholesale sales were down to Virginia as a result. But and I don't know exactly. And they're small businesses for the two big people in the state, so it's not like really move their numbers, to be quite frank. But for us, it's growing because it's good value. People love the program, and so we sort of had to bring on a room to address that. So we had 5 rooms in place. We brought a number 6 in the second quarter, so that's happened. Which again, you increase the units of production, right? And then we're bringing on 7, planting it before the end of the year. I think maybe John said it on the conference call. He's running the construction side of the business, but I think it could be like soon, like September planting or something. I don't know exactly when we plant that, but there's always delays. So say before the end of the year. So that's from 5. They're all about the same size. So 5 to 7, right? 6 is on, and then 7 coming, and then 8 is a little bit more investment because it's more unfinished space, and it's our last capacity we could bring on. That one will be, if we accelerate that'll be for adult use. And to be honest with you, 7 could be kind of adult use or Ayr opening stores. We are counting. We have been talking to Ayr. We're hoping they have a lawsuit, a loser lawsuit we call them, when the people don't win, to slow them down. And people want to say, well, they don't have money. I think they understand one of the best investments they could do is open those stores, and they have to. Even if they want to sell the license, they need to get that business going. MedMen lost it because they didn't invest in the business. So that's kind of medical, but that's also adult use for us. And then just to finish the Virginia story, we're also likely, if adult use happens, going to begin a construction project to expand the warehouse. Those are all in warehouse, much cheaper, much higher ROI in the short term. And then, but we have tons of land, and we'll expand that. In PA, we upgraded 2 grow rooms to increase the yield, complete upgrades, 2 old rooms, like previous owner, and then we took our dry space and we create dry space for expanded capacity, and then we're turning a grow room that we use for distillate into 3 rooms. That's all in progress. The first set of flower rooms are done. The dry space is almost done. You need that first before you can start, really taking advantage of increasing the grow. And then the grow increase, that'll be planted towards the end of the year. Again, maybe sooner. So that's a nice expansion, and we can sell that in the medical market. And then there's 2 more expansions, phase 2 and phase 3 there. Phase 2 is, another grow room that we're converting an old grow room legacy previous owner into modern grow room. So it's high ROI, low CapEx. And then the other one is in warehouse, but taking, raw space, administrative space, kicking those people out of the building, put them into another building, not in the the growing facility, and converting that to grow rooms. So that's adult use. We would only do that in adult use. So we have all kinds of stuff going in both of those, which again, that increases margins because it decreases your cost per unit. But we have the capacity to grow in the medical in both markets, in our retail system, and in Virginia we have a growing business. I feel great about what we're doing.
I mean, the next one's a 2-part question. Transformationally, which one do you believe would be bigger for Jushi, PA flipping or VA flipping? And do you agree with Pablo from his note earlier in the week that VA will flip before PA in terms of adult use coming online?
I thought he was talking about I don't agree with Pablo. I wasn't sure if he was talking about the Veterans Administration. I don't know what VA he was talking about, but no, PA will. But he could be right. I don't want to laugh him off. I like Pablo. We talk all the time. He's a good guy. He's a very diligent analyst. But I disagree. I think I'm very optimistic about Pennsylvania, and so I said this on the conference call. So there's bicameral, bipartisan bills, right? So bicameral, I didn't know what that meant until Trent explained it to me, to be quite honest. But that means there's a bill both in the House and the Senate. That's bicameral.
Mhm.
Bipartisan means each bill is bipartisan. So in the House and the Senate, you have what's known as bicameral and bipartisan bills that match each other. There's two in the House, one exactly matches, and the other one, I think 95, 97% matches what's in the Senate.
Yeah.
So and they need the money, which is key. And I don't think there's anybody that against it. I think it's more about horse trading right now in the budget because they have big deficit. You have Democrats more willing to spend. Maybe the governor has an agenda because the presidential election is coming up in 28. I don't know. He would we obviously wouldn't know that. So then you have some priorities in the House and some priorities in the Senate, and they have to work that out. The governor needs to get in there and do that, and he did it last year and sacrificed cannabis. And I think that was partly because of the VP thing going on. But cannabis is like $350 million of revenue that they desperately need. And remember in Pennsylvania that the big beautiful bill, and by the way, I didn't realize that, but that's actually the name of the bill. I thought that was just how you said it.
Oh no,
but it's actually the big beautiful bill. That's the name of the bill. Yeah, BBB, and so the BBB cuts Medicare, and what that means for a state like Pennsylvania, all states, is you don't get federal funds coming in that you have been spending, and it also cuts the SNAP program, which is like food stamps. $2 billion. I've seen estimates $1.5 billion just, and obviously they're going to have to cut some of that spending. But they had a really big gap last year of $1.5 billion deficit, and their rainy day fund is getting down to, they have two different funds, but added together to like $7 billion. I think some of the more fiscally conservative people in the state are really not comfortable getting much below that, or even $6 billion. So they really have to, so that's why I have optimism is, having those bills in place is very powerful. They've been vetted, they've been voted on by committees, and it's very powerful.
Speaking of the big beautiful bill, one thing that did surprise me on the call was early in it, you had mentioned, I think there were 2 incentive programs, or it was a tax break or something, that you said that Jushi as a company was going to be able to utilize, that the big beautiful bill has implemented. I mean, can you walk me through that or give me a little bit more color?
Yeah. I mean, one of the advantages of being invested in a smaller company is we get more granular about some things, because bigger companies, it doesn't matter as much. So they don't have to get as granular. So, when I used to be a hedge fund analyst, I'd like to, the smaller companies, you can really understand the scoop. So I think it's for everybody in the industry, not just Jushi. It's for every company out there in America. So basically, one of the most powerful things for the economy of the country is 100% depreciation up front when you're manufacturing something, and that rolls back to the beginning of the year of this year. So it's a rollback to January 1st. So I just mentioned all these grow rooms. What we've been doing, we've been opening retail. So that gives us more deductions because of what we're able to write off. Okay. It's that simple. And then going forward in 26, for example, I just outlined these capacity increases we have, and that is gonna, defer taxes for us, definitely federal. And I haven't really broached the topic with my CFO, but I would hope state too, because the federal leads into your state returns. But we'll see about that.
And then I know you mentioned Ohio. I know you're going deeper in Ohio. How are you feeling about Ohio? I mean, I know that we had but some people in the industry had very big expectations for Ohio on terms of launch. I know Ohio's been quote unquote successful so far. I don't think it's grown as quickly as people thought with the legislation, with the rules and regs coming online in a timely manner. I know there's been some friction there. How are you feeling about Ohio, and how is Jushi looking at Ohio currently?
Yeah. Okay. So I would point out that comparing Ohio to Pennsylvania, just to put things in perspective, in Pennsylvania, it's just, right now there's about 200 stores open.
Okay.
In Ohio, you get the exact numbers from Trent or whatever, but I think there was about 120 stores open. Okay. Right. And they're both about the same size states. So when stores beget market size, like Michigan, it's like the biggest cannabis market, right? There's stores everywhere. I mean, it just increases accessibility. People aren't going to go that far, and so and the black market is close by, even delivers in most of these states, right? So like, so I think Ohio market has growth associated with store openings, right? And so the initial bump is, I think will be bigger in Pennsylvania because we have the border states that'll lose business. We have the legal market that'll lose business, and we have new people that'll come into the market, maybe gun owners, maybe whatever, who didn't want medical cards, which are a lot of gun owners in Pennsylvania. But I think and the other thing about Ohio store wise, it's a very spread out state, right? I've toured Ohio, I've toured everything that we're bringing online, and it's very, very spread out. Like, it's tough to go there as a CEO and say, I want to see all my stores, So that means it's even more, it's more rural than Pennsylvania, for instance, in terms of farming and stuff like that. It's sort of beginning into the farm belt, like on the other side, Indiana, which is a farm state, right? And so I think that's what people have. So for Jushi, we didn't have a big business in Ohio. So, one of the things people were concerned about on the call, that I think we properly addressed is we have been spending a lot of capital, right? And we have a refi coming up, right? So that, and obviously as a hedge fund guy, I understand risk and reward and kind of, we're good at managing the cash flow. We have models that are very predictive of month to month, thing. And but we're opening stores and investing. And I think we got things a lot cheaper by moving quickly, which is the reason why we did it. There was more available in the beginning, and it's been somewhat competitive for these stores. The longer you waited, it's gotten more competitive. And there are a lot of local, it's not just MSOs. The MSOs are pretty full, but there's like a lot of local businesses. It's kind of surprising how many local businesses there are who have multiple stores and to grow or not to grow and or just to grow, not so it's a different sort of setup than I was used to in other states like Pennsylvania, where it's more concentrated. But we've been able to put together so far 7 licenses. 2 were ones that we've won. One was the existing store that opened that had a great store, and then 1 we're opening up at the end of the year, and then we bought 5 more to have 7. And by the way, even though we have like 5 open now, you have same store sales growth coming from the ones we open, right? People aren't going to figure out they're there. I mean, you typically get same store sales growth, out of a good store for a couple of years, a year, 2 years, something like that, or more. And like, I'm still seeing same store sales growth out of a new store we moved in Mount Pocono in 2 years ago in Pennsylvania, in a medical program. So like, so we're going to continue to see growth based on what we've already have baked in. We have ways to improve stores, and as well, and improve our market share, and then we have our A store. So you're going to see that we have a growth business in place for a substantial period of time in Ohio. I think you'll see revenues growing, through 27. Maybe not through all the way, but into 27, but probably through 27. And I think you'll see cash flows growing, maybe even beyond that, because what we'd like to be doing, but we're capital constrained, is doing a expansion part of our grower processor to feed our retail distribution system and serve the wholesale market in the way we normally do it in our states. And we're not able to do that because the cost of capital is too high. So we're being patient there. And also, by the way, we haven't run our stores open. I'd rather have my demand in place, but it's about time for us to start that, because it takes a while. It's going to take a year, 18 months to get the construction finished. So it's about the time for us to start that, and that's a priority. So if you see Pennsylvania flip, right? If you see our cost of capital go way down, and you know what I mean when I say cost of capital, there's debt, there's equity, there's lots of different things, and you've seen it already because people understand we're probably the best play on Pennsylvania. You're going to see us be able to expand Ohio, which means that we have, and I think Virginia goes too. I'm optimistic about that because of the election. So you have three big growth states for us, which is, if you look at the total number of states we're in, that's very good.
How are you thinking
we have
about
5 vertical states, and 3 of them will be growing.
How are you thinking about New Jersey? Because I know that you've got one retail location in there that was new for the queue. What was the thought process, or I guess strategy, with going into New Jersey? And is the strategy on a go forward basis to go deeper into New Jersey? Because we've seen some MSOs have trouble there over the last couple of quarters in terms of just saturation of retail in that state.
Yeah, but so I would speak to that. I mean, it's similar to the Ohio. So if you're a big MSO and all your stores open in Ohio, you get that big bump, and then what happens? Well, then you have the stores that other people are opening that are going to be competitive to those, let's say, 5 stores that they had. Well, but you have to open 3 stores, but these people are so big, maybe they weren't lined up as much, and they're going a little slower than small companies would, because we're just a little more focused on what little state, the little footprint we have, right? So they, their growth stagnates, right? And then they get competition. Maybe they have stores opening, but then they've lost market share on a retail basis, and so like that's and then if you look at the legacy licenses, I think there was 10 verticals, right? And so if you look at those vertical players that you're talking about, their peak revenues would have been right in the beginning, because they only had a few stores. So I mean, famously, Boris would talk about $100 million store. Well, I'm sure it's not 100 million. I'm sure it's like probably 50 or less. I don't know. I mean, I don't know if they disclose that, but just based on common sense, So there's 50. That's a big loss, right? 100 million store. There's nowhere to go but down there, right? So like everybody had that, right? And I think some of them have like a little bit better store footprint with less competition, like in northern New Jersey or something like that, and they had less of that, but some of them are more exposed, to where these stores could open. So, there's some variety. And then in terms of their grow, their peak prices would have been shortages in the beginning, and now there's grows opening. So like, yes, of course. I mean, they're not having a problem. It's a great business for them, but it's not growing, and you combine that with some of the big players. They have Illinois, it's a similar story. And you have, New Jersey, two biggest cash flowing states. It's okay. So yeah, you can see where the growth, the growth is not. You have to like outrun that just to get growth, right? And so we're for us, we're like we have a ton of growth. So when you look at our EBITDA, we should be able to, if everything happens the way we want to, we should be able to, over time. I'm not talking about this quarter's EBITDA. I'm just saying, just generally, what EBITDA, it should be able to, with growth, including acquiring licenses and opening stores and stuff like that, and spending. This is not just growth that just appears because it's this is working on Ohio, moving stores, doing things, defending current markets and fighting, loss of market share in Massachusetts or whatever state. I think Nevada can't get much worse, but to be honest with you, I can't, I don't know. I mean, but you're going to see EBITDA grow, 200%, I mean, that's a growth stock, I mean, by the way, that's not a prediction. That's not me. That's not me looking at a model. That's just me just like, spitballing. Okay. And, I'm allowed to do that. This is not me giving guidance or whatever, but there's a huge amount of growth, right? In a company like ours. So getting back to your question, New Jersey, opportunistic. Like, I mean, I'm a hedge fund guy, right? I'm opportunistic. I sold Las Vegas for $3 million, and I probably opened those 2 stores for like that similar amount of money, total. Including, we won a license and we bought a license real cheap, and then a store probably less money. I don't know. I don't know exactly. Again, I'm not saying, but it wasn't much different. So, I mean, if they're decent stores, those vertical players are finding ways to get another 10 like they did in Illinois. It's not often talked about, but, sort of through joint ventures, whatever they do, we could flip them. If we don't love the market, we're going to be able to make money, right. But if it works, we got a great business. We can manage it from Pennsylvania. One store is close to Philly. Our Philly management team could, pick up another store, and then the other one is not far from Easton. Some stores we have in that Bethlehem Easton area. I mean, it's not that close, but it's a car ride. a couple hours or something. I don't know exactly, but my point is probably less than a couple hours. So like, so we're leveraging our management team, and we're learning a market, and so, I could exit, I could grow, So
and
I've
talking
seen
about
grows, by the way, I've seen grows offered to me in New Jersey for the cost of the lease.
Okay. That's not surprising. And then talking about in terms of risk, one thing that we've heard from several MSOs is on the wholesale side of the business, managing risk, being more selective with who your wholesale partners are, seeing how strong their credit is. Is that a trend? I mean, is that something that you guys are doing in terms of the wholesale business with just managing risk with who you're selling to versus being able to utilize that product and sell it through your own channels as branded product with clipping a bigger margin? Or is it kind of overstated, let's say, by some companies as far as an industry trend?
Well, I say controversial things because it makes it fun, right? And people entertains people, but it's fucking stupid if you're not managing your credit risk, right? Just fucking idiotic.
Yeah.
So like, to say like I'm going to do a better job managing my credit risk, it's like you should have been doing that 2 years ago.
Yeah.
Okay, 5 years ago, 7 years ago. So we've been managing our credit risk, and we're good at that. We manage our working capital balances, we manage our inventory, manage our credit risk, and so I think what they're saying, and I don't. By the way, I don't know what they've said. I don't listen to what people are saying. I don't have time. I wish I did. I'd love to learn from it, but but I think what they're saying is that they were surprised how bad it was in New Jersey,
Yeah.
And I would say, well, you probably should have saw some hints from that in Massachusetts, right?
Mm-hmm.
Because there was no picnic in Massachusetts going on, right?
Yeah.
So, but but you probably had owners in Massachusetts of a higher credit quality, right?
Okay.
Like
that makes sense.
I don't see a lot of people like in the Massachusetts market that were former black market people or whatever. I don't know New Jersey, we'll see, but I don't know who owns these licenses. But also New Jersey is a tough place. I sold a 20% of a New York license. We sold it to a large MSO at a huge profit. We managed a portfolio, but I thought the regulator in New York was terrible. It's a long time ago. And I understand people's questions about New Jersey, and I think the regulation setup could be much better, and they've been, but New Jersey are tough people. Like these people have run businesses, like the local people. They're like, it's a very savvy place. So if they can get away for not paying bills, they might try and do that. And if you operate in California, by the way, you definitely should understand credit risk. And we lost a little bit of money in California, I'm sad to say. So we're not perfect at all as risk managers and investors, but like that was a real big problem in California, and we heard that just doing due diligence. We never got hurt. We didn't have a growth, so we never got hurt. We were just a buyer, just retail only. So anyway, basic running the business, it should be a trend. You should be doing that, and that's it. I mean, that's the story there.
What do you think? How are you feeling the rest of the year? Going into let's say Q3, Q4. Ending the year. I mean, any themes you're looking at? Anything that you're looking at in terms of, let's say, strategy? Like how are you feeling going into the year's
I
end?
would say, in terms of the business, I would say that we're hopeful on the margin front, and we have to grind sales increases. Third quarter is usually our seasonally weakest quarter. I addressed that on the conference call yesterday. People are on vacation, right? We have a rich, a high per capita income place in Northern Virginia. Guess what? They take their vacations in the middle of the hot summer when the kids are out of school. It's just a tradition in the U.S., right? And then I think Pennsylvania. We suffer from that as well. The seasonality of the business. But having said that, I think the industry understands that. Everybody knows that. Other people have different seasonalities in their business. I imagine the Florida people, had the hot summer is probably people are leaving Florida who might have licenses.
You're not the only one. I've heard seasonality coming for Q3 on a couple of earnings calls. So I mean, it's absolutely not an isolated case. I think it's going to be industry wide.
So that's Q3. But on the flip side of that, Q4 is every year has been the banner quarter. We're discounting, but you're moving a lot of units. So because you're moving, the margins work. And by the way, that's the other thing that I think the two things that are not talked about enough, in this business, by CEOs in the industry and the analysts and all these different people. I said it yesterday on the call. Is as you get price I didn't say this part, but as you get price compression, your job is to bring your cost per unit down. It's typical in all kind of industries. So that doesn't mean you necessarily. And by the way, you're selling more units. That's 100% sure in our business. The more price goes down, we sell more units. Now you have to operate more efficiently, and that's what businesses do across a wide variety of businesses. Typical, right? And I think the other thing we have to focus on is all these smoke shops and hemp shops that we got to just, we're shining a light on that. We've been very, very active in that. So what I see going forward on the numbers is hopefully we're grinding out sales increases and margins. I don't know. I was hopeful. I don't know. We don't predict numbers because we found that hazardous to our investors' health. So we just shy away from it because it's very hard in this business. But regulatory wise, we're very hopeful in Pennsylvania that we get something early in the fourth quarter. And right now those bills in place have a 90-day start period. So it's going to be craziness if that happens. Like trying to bring on that little grow room that we have and get your stores. And we're already doing a lot of this stuff, but we could have been doing this for 2 years, way too early. Right. So you have to
Florida was an exercise. Florida was an exercise, and don't jump the gun and don't do it too early. There were several companies in Florida that thought Amendment 3 was going to pass, and they're looking at excess capacity, if not dormant capacity.
And by the way, I explained to you how we're so incremental about this because we're feeding our medical market and setting up. That second phase. I think eventually we'd be able to feed. Remember, in Pennsylvania, we're in the that's our penetration on the shelf from our is probably below our four company average, right? So if 4 company average is 56. I think Pennsylvania is low. We have room to move that up to, and I'm saying we're growing it just because of units. So that's why we need capacity, so we're managing that risk very, very closely. But yeah, I mean, so I see regulatory change in Pennsylvania. I see the election in November in Virginia. And, federal, I think you're as educated as probably anybody. You're talking to everybody. And when you guys do a short post on YouTube or whatever, about something, I'll like listen to it because, so I don't think I have any special sauce to add there, but I do think this farm bill is important. And we spent, everybody contributes where they can. I think the industry's, worked, for an industry where we compete a lot, I think they're working well in Washington together. We're not a player in that because we're so small and we're overweighted to PA. So we've worked super hard at PA. So our time and money's gone there. And the big folks, our counterparties on the big MS, so they understand that, and they appreciate what we're doing there. Likewise, there's not many people in Virginia, but that's a huge focus for us too. So like that's where we spend our time and money, but we are spending some on this farm bill because I think that's under that is just like not a narrow way to arbitrage it. It's like a wide open freeway at this point, and you see it in Nevada, too.
See it everywhere. I mean, it's crazy. Florida, Texas, PA. The Philadelphia Inquirer just had a huge article on pesticide-ridden product being sold through smoke shops. I mean, it's a problem.
Pesticide-ridden illegal product.
Correct.
I mean, correct. And some of that wasn't necessarily, but anyway. So I think you're going to see a lot more law enforcement on that. I think like the Philly Inquirer's thing. I think the people in Pennsylvania who govern in law enforcement. I think they're probably going to be more. I would think more active than most states. Because it's maybe it's widespread. I don't know. They just feel like they're going to be more active. Virginia, it's as obvious, but there's been less action on that. I think Youngkin just wants to,
he's been a roadblock.
He's but even on the illegal stuff, he just wants to. He wants to like pretty up his resume for a presidential run, and he wants to pretend like it doesn't exist. I think he's managing, that on hope, not reality.
Same. I think we get a lot of these politicians that function on hope, not reality. I mean, look at Nancy Mace. Nancy Mace was coming on our show every other month and talking about cannabis and progress in Washington. And now we see that she had aspirations for the gubernatorial race in South Carolina. And we were wondering why she went silent on the issue. And come to find out, that's why. Cannabis is a very taboo issue for some. But nationally, obviously, the stigma has been getting dropped, as we all know. On a day as days go by. So I mean, hopefully
I don't think there's any stigma anymore, except in these conservative politicians who think they have to, win a certain kind of vote. I mean, I mean, in the circles that I run in, I mean, people are very open about it. Highly educated, conservative, they're very open about it, and because I'm in the industry, that you sort of get people telling you everything about their consumption habits, and so and I'm not that young, so I'm talking about peers, age wise, or older even, or a little bit younger, older, whatever, 20-year, it's and older folks using it for pain. I mean, that's an increasing trend because they all talk. I mean, I got tennis elbow,
pain and sleep.
I got tennis elbow. I haven't been to a doctor, but you got YouTube, and you just talk to your friends who have tennis elbow, and you figure out what you need to do, and you buy some stuff on Amazon to do the exercises, but yeah, I mean, so like that trend amongst the baby boomers, where people say, I use this for sleep, I use this for pain, and then people who are using it successfully also figured out the crack the code on how to use it. Start like low potency, work your way up. Don't go out and blast yourself and then get turned off from it, and
that's the easiest way. That's a problem. That's a big problem. Especially with dosages. But the future's bright. Hopefully we get some federal stuff here going into the end of the year, which obviously we're all reading
exactly
and hoping for something. But Jim, this has been great. I appreciate your time. Appreciate the quarter. Look forward to having you on next Q, and looking forward to these numbers continuing to go in the right direction.
Thanks. Keep up the good work with the podcast.
Thank you. Appreciate it. Thanks, Jim.
Take care. Bye-bye.
Bye. Well, that was good. Obviously, it's always a good in-depth and detailed conversation. I mean, we know what's transformational for Jushi with PA and VA, which will be both big adult use flip markets if and when they go. That's pretty much going to be it for today. I mean, everybody, thanks for tuning in. Shad will be back with me tomorrow for the live stream with Boris at 11 a.m. To go over Curaleaf's earnings, and then we'll be back on Friday. So everybody, thank you, and have a good rest of your day.
So, what'd you think of all that information? Some interesting stuff that we just learned once again here at the TDR Traded Black podcast. Let's keep the conversation going. So leave your comments below. We'd love to get your feedback. As usual, if you have time, make sure to like, subscribe, and smash on that bell for all notifications. And stay connected with us here at the Trade to Black podcast. Thanks for watching, everyone.